Good afternoon, everyone. Jason here. Today is September 13th, and this is your aftermarket update. So as many of you know, we like to provide you with a trade of the day video to show you that it is possible to hang on for trades that are in the 5 to 6 to 1 or greater risk reward ratios. If you haven't done so already and you haven't heard our discussion on trading edge and how you can maximize your trading edge, I encourage you to look here on the YouTube channel and find our risk analyzer discussion and how it is that these trades that are 2.5 to 1 at least or greater are really the best way to be the most consistent that you can in your trading. Having said that, let's talk about today's activity. We started out the trading session today, and I'm going to show you a profile here. We started out and opened a couple of different ways. In the overnight session, this is the extended trading hours profile. If you look here, and again, I can't quite stretch this out, but you can see that you had a pretty narrow initial balance range, and then we began to sell off into the overnight session. In fact, if you look here at the high today, 70.28 corresponds, and that's the open, and corresponds right here with your market structure mid, one of your overnight levels. And so one of the clues that you had today that the market was going to be looking to the downside is you spent a lot of time in the overnight session. In fact, 100% of the overnight trade was spent underneath of the previous day's settlement. That's a pretty good clue that one of two things are going to happen. All of that overnight inventory is going to be recovered in the day session, or if you open up your RTH session and really never look back from this settlement area, that is a really good indication that you may have a big sell day on your hands. If you take a look here at this, let's do this. We're going to bring this chart over in front of you, and this is what the opening RTH session looked like. So if you see here, the A period in the RTH session tried to rally up into this 66.73 right to the tick, and I'm going to show you what level this was today. So again, we opened below the previous week's close. Again, the market opens underneath settlement, and if I can squeeze this chart in just a little bit more, I don't want to squeeze it in too much, you can see that we gapped open. Let's see if I can get this to do what I want it to do. Here we go. You can see that we gapped open underneath the low from the previous RTH session. So you got a lot of things working in your favor today to give you a clue that the downside move was going to be possibly in play here today. So one of the things we talked about to the group this morning prior to getting in is we said that if we don't recover back up into settlement and that we do open and begin this push down, that we would be looking for a pretty good sell-off today, or at least momentum to the downside. So in the A period, we opened up, made a high, and this high that we made in the A period corresponds directly with one of your RTH levels. There it is right there. There is your 73 high, and that is right into your daily structure mid. We made that high. We began to sell off. Market comes down all the way down in the B period to this 17. Again, that is going to be a level that corresponds quite nicely with your daily structure signal. Right down into that, there's the 17 low daily structure signal, rallied back up. We had this big spike up, and what we talked about in the trade room is that that spike up couldn't clear out the previous A period high, the opening high, and we got to within a couple of ticks of the open. We said that if the market comes down through this 57 level, that we were going to be looking short. You're going to see me get into a trade there below the previous week's value area high, and you're going to see me jump in at 55. Now, we had this idea in mind, and we were trying to execute this a couple of times here today. I did take a couple of small stops initially this morning, and so what you're going to see, and I'll highlight this for you, is that I was down a few ticks getting into this big trade, but what we ultimately did is carried it all the way down into your structure target. We were hoping for a bit deeper target, but we were pretty happy getting in at 55 is where I ultimately got in at, and made it all the way down to 37. I ended up getting taken out right up here, just one tick above our daily structure target. So we went 55 down to 67. Now, I did add one lot to the position along the way, but that didn't cost me any ticks as I got taken out at break even on that second lot there at 67. So at the end of the day, we did catch a very handsome CL move, all set up based upon our overnight levels, our after pit open levels, and in corresponding with the profile information that was being shown to us. So all in all, a really good day. We ended up with a 5.5 to 1 risk reward. My stop was a little bit taller. I should mention that to you. My stops that I usually like to take are somewhere between 10, 11, 12 ticks. This particular trade, I had a 16 tick stop, just given the volatile nature of that one spike up prior to me getting in short there at 55. So I wanted to make sure I'd given myself plenty of room to be able to not be ticked out. And that ended up being a really good idea as the market ends up selling off all the way down to that 67 level. So again, I'm going to show you the video here. I'm going to cut it down. I'll let you hear where I get in. I'll cut it down into pieces, put some music behind it, and speed up the tape so you can see the trade in its entirety. So having said all of that, without further ado, here is the OTG trade. I'm in at 55, short on the CL. Stop here, 71. Target is still the same target down below, which is at 66 underneath. This is the previous session value area high.